If you're an expat investor buying property in the UK, you could be making 3 logistical mistakes that's going to cost you money, time, and the best deals. The first is delaying your limited company setup and the bank for your limited company for your property investment. For the best deals, you often need to be able to move quickly. And because you're overseas, these things can take time. And if you're not able to set your limited company up or get a bank account for your limited company quickly, it might mean that you miss out on the best opportunities for you. The second is underestimating the management burden. As you're based overseas, you're going to need a specialist agent to manage your property for you to maximize your returns and make sure that everything's managed properly moving forward. If you just go for the cheapest management company you can find, the chances are they're not going to give you the best service and it's just going to cause you more headaches while you're based overseas. What you want to do is use a specialist agent that specializes in managing properties in the local area, that know the local market inside out and will give you a good service even though you're based overseas. Believe me, your time and the stress that you'll save is worth a lot more than the 1 or 2% you would save by going with a cheaper agent who don't manage the properties properly. All you need to do is look at government officials who have recently been in trouble because they haven't had the right advice or haven't had their properties managed in the right way. Don't let this happen to you. Use a good quality local letting agent and make sure that they're providing the service that you deserve. The third is poor exit planning. A lot of investors who are based overseas focus too much on the yield. Obviously, the yield is important because the likelihood is the financing for you is going to be more expensive. That might be 0.5 or 1% higher than what it would be if you were based in the UK. But the yield is not the be all and end all. You need to make sure you're buying good quality assets in areas primed for long-term growth and make sure there's a demand there for both home buyers and local tenants. Your plan might be to hold this property for 5, 10, 15, even 20 years, and that is fine, but you still need to cover all bases and protect your interests at every stage. Obviously, as an expat investing in UK property, you want to be a hands-off investor, so make sure you set these things up in the right way to give yourself that opportunity.